morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me, Sumaira Abdi and Pavitra Parekh. And things are quiet. We've had a good run-up in the markets over the last couple of weeks, despite the volatility, despite the global weakness. But this morning, we opened higher and we've slipped from the top of the trading session. As we speak, we're currently down about 50-odd points on the Nifty. The Sensex lower by 110 points. Dreamfolk, the new debutant on Dalal Street, is coming out with the Q1 numbers. There is a consolidated EBITDA profit of about 19.2 crore. The consolidated margins now stand at 12% for Q1. These 12% are the margins that the company enjoyed pre-COVID. If you look at the FY20 EBITDA margins of Dreamfolk, I think it was close to about 12.5%. Then in FY21 and FY22, due to the COVID impact, we saw the margins decline for Dreamfolk. But now with domestic and international travel returning with full revenge, with full force, we've seen the operating leverage kick in for Dreamfolk, and margins too have come in at about 12%. It's been a very strong listing for Dreamfolk. I think the opening pop was a gain of close to about 55-56%, and it's broadly holding on to all those gains. Consolidated net profit too, this time at 13.4 crore versus a loss that it had same time last year. The revenue too, you can see a big jump on a year-on-year basis, and that's because the base quarter, that's the same quarter last year was impacted due to the COVID second wave. And this is a company which is directly linked to travel. It's an airport service aggregator, which basically means that if there are many credit card companies who will provide you airport lounges. So Dreamfolk provides the technology, the interface, the technology platforms between, say, the credit card company and the airport lounge. So the revenues, the business model of Dreamfolk is directly linked to travel. So which is why in this quarter, the quarter gone by, April to June, with travel, taking place with full force, we've seen a very strong performance in terms of financials. But of course, it is high beta. It depends on the cyclicality of the travel business. But good Q1 numbers, and we've got the management as well at 11:40.
Yeah, it'd be exciting to speak to them and see, what the plans are like, when we can get back to sort of the pre-COVID kind of growth as well. So I'm looking forward to that chat. For the rest of the market, if you take a look at the Nifty pack, there are perhaps 3 stocks which are trading with gains of over 1%. So let's move out of that and take a look at the mid-cap index, because there you're seeing a lot of action come through. Take a look at some of the tire companies, for instance, JK Tire, Apollo Tires, something like a Seat, all of these seeing some good gains come through in an otherwise muted market. So keep these on your radar. Some of the sugar stocks are also really buzzing. So whether it's the Sakti Sugars, you have just some of the names on your screen, but pretty much all of them are seeing good gains come through today. And some of the pharma pack, the larger names also holding up in the green. On the downside, it is FMCG, which really has my eye today. So something like a Tata Consumer, Britannia, Nestle, all of these under pressure. And this is sort of piling onto the cuts that we saw earlier. But all in all, we have seen quite a cut come through. It is around 140 points gone from the top, Sumaira.
All right, so let's get started. Morning to all of you. Here's what we have lined up. Indices have slipped after a positive open. Mid-caps outperforming. Auto and energy stocks gain, and it's FMCG and defensives which are lagging behind. So we'll be joined by Rohit Srivastava of IndiaCharts.com, who's going to talk about the outlook for the market going forward.
Amid the G7 favoring a cap on Russian oil prices, Petroleum Minister Hardeep Singh Puri tells CNBC that India will assess if it should support a move, and reiterates that India will continue to buy oil from Russia and act in national interest. We'll get you excerpts from that very interesting conversation in just a bit.
And it's a stellar listing for airport service aggregator Dreamfolk. We'll get to the details of the D Street debut, and we'll also be joined by the management in just a bit. All of this and much more lined up over the next 60 minutes.
But first up, let's talk markets and invite Rohit Srivastava, the founder and strategist at IndiaCharts.com, on the show now. Rohit, morning. Your thoughts now on, the Nifty. We've been talking about India's outperformance relative to the global markets, but it's been volatile over the last few days, and fundamentally as well, we've started seeing the FI sell in the cash market. How are you reading the setup right now and the key levels, the way forward?
So this has been a pretty strong technical rally, I think, from the bottom in June to the peak that we've seen in late August. The high that we've made, I think 17,992, might pretty much be the top for the time being. I doubt much that we'll go past it, though we have seen the Bank Nifty, mid and small cap stocks actually go a little above those highs. But this non-confirmation between Nifty and other indices tells us that, we're still not out of the woods here. So, like I said, it was a technical rally. You had an extreme negative short position which got squeezed, and then that rally's actually extended itself a little bit, making it look like we are probably outperforming the rest of the world. But going forward, like I said, we may have peaked here. We're in the process of, I think, exhausting that momentum. And most momentum indicators diverging negatively with, price action across sector indices tells us that we should start seeing things cool off, and then we probably see our market also catch up a little bit with what is really happening and likely to happen over the next couple of weeks, in terms of global market action and, all the policy action that is coming up over the next 2 weeks. So I think we are pretty much done here trying to discount our strengths relative to what is happening around the world, but we cannot really remain disconnected for a very prolonged period of time, and which is where I think the catch-up is really going to happen.
Rohit, good morning and thanks a lot for joining us. This is Pavitra. Also, take us through your call on what's going on with the Nifty bank. Of course, for a while we were talking about that sharp rally that we saw, but what are the levels that you would look at now on the Nifty bank?
So I think somewhere between 39,000, 40,000, 40,000 odd, I think should be a major resistance. I don't think we should go much above 40,000. Probably head lower from here. So the major support we'll start looking for, I think, is going to be closer to the 20-week averages, and when the pullback in indices takes hold. So those levels for the Bank Nifty at around 36,500, and for the Nifty it's at around 16,700.
Hi, Rohit, morning. So if the call is that, the Indian market will probably catch up with the kind of, pessimism we're seeing globally, how much lower do you think we could go from here? And, what is the probability?
I think the probability is pretty high in my mind. A lot of people are sensing that this outperformance in, mid and small cap stocks is a sign that things are a little bit rosy, but as I said, the Nifty has not really taken out the high it made almost 2 weeks ago. We stayed below the 17,992 level. That is probably the first pause. The other things to really watch out for are around various global factors which will affect directly our own macro, which is the currency and bond yields. I think both of them are pegged to probably weaken from here, which means higher bond yields are possible, and also a weaker rupee is possible. And in that light, I would think, the Nifty, the first thing that the indices do, like I said, is go test the 20-week averages, which is around 16,700 on the Nifty and 36,500 on Bank Nifty. That will be probably the first move. Now, whether that level holds or not would further determine how much further we're going to go down from there. My sense is if we do play complete catch-up, then we are looking at a retest of, the 15,000 level that we saw in June. But of course, let's put that on a break of 16,700. That would open up more clearly. But that's how we're going to take it. First to the immediate support, which is at the 20-week. And then if that breaks, then we look at, much further declines from there.
Okay, so the recent top of 17,992 is the peak, and the bottom or the near-term target could be the 20-week moving average of 16,700. Rohit, what about the dollar index? It's flirting with 110. What's the chart telling you?
So the dollar index is in a pretty strong trajectory because it's broken out of what we call a 5-year range that it was stuck in between 104 and the bottom end maybe around 88, 87. And breaking out of that in 2022 sort of sets it up for a course that could see it going much higher. If we just measure the size of that range, then it would help us project all the way to 124. Now, that may not happen immediately, but you'll probably give it, say, around 6 months for that, something like that to play out, which would then happen on the back of, weakening currency pairs. We have already seen both the yen and euro play the most significant role. I think the next two that are going to play a role are going to be the pound and the yuan itself, which is the Chinese one. So this USD CNY is among the currencies which has started to weaken recently, and I think that will probably join in driving this currency war that we are seeing.
Rohit, one sector that I want to ask you about is the auto pack. We've seen that huge rally come through, even in the auto ancillary names. When you look at these stocks, do you think that there's a lot more room left for them to rally, or do you think that maybe seen most of the gains come through?
I do think a lot of the gains for the time being are done. If I'm really anticipating a serious pullback in the main indices, I think the auto pack would not go unscathed by that. So I think there will be a negative impact on the auto sector as well, and we would probably want to wait for that to happen before adding any further bets on that sector.
What about defense?
So yeah, this is the popular question. If you're bearish on the market, where do you really hide? And my sense is, because the next leg down driven by global markets could be one where you'll probably find it very hard to find a hiding place. But defense is one of the sectors that when you actually go into a cycle degree bear market, geopolitical risks tend to rise, and for that reason, I think the allocations to defense expenditure also have jumped up and might probably remain elevated, which is probably the only place I would think on top of my mind where I would want to hold on to some investments. And I think the entire pack there has done well. Even if it does pull back with the market, I think it will tend to outperform on a relative basis, falling less and maybe gaining more over a period of time. So I think that's the only sector I would allocate to.
Another space that we have been talking about a lot is, the entire revenge travel, all of these hotel companies, air companies. Do you think any of them look exciting right now at these levels? Of course, they have run up significantly, but would you look at them right now?
Yeah, so for the last 2 years, we've been invested in, say, Indian hotels, for example, just as an allocation towards that sector, and that's done pretty well. So my sense is that the whole problem here is, for example, we are all traveling a lot, especially a lot of foreign travel also happening. But as you can see, the costs of travel are incrementally going up. So a lot of this demand that we have seen, which is because of the 2-year lockdown, somewhere I think you will see a peaking of that and a flattening out, and so there's room for a correction. I think with the market in general, it's not possible that a market goes through a deep correction and in some of these sectors don't pull back a bit, but they will remain on top of the mind, I think, for staying invested in over a period of time. So as and when they do pull back, I think they would be an attractive place to be in.
All right, Rohit, we're going to leave it at that. Thank you very much for joining us and taking us through your call on all of these individual sectors and telling us what perhaps should be some of the key levels to track for the markets. By the way, speaking of the markets, there is a pickup once again. We're moving towards the flat line. So from the lows, we've come off around 65 points higher, and we are attempting another move higher. So in just the initial hours of trade, it has already been quite volatile. So let's see how we go from here. For now, we're going to get into a short break now. But when we return, Petroleum Minister Hardeep Puri talks about India's take on capping Russian oil price. Details coming up for you in just a bit.
Hi, welcome back. You're watching Trading Hour. Now, Petroleum Minister Hardeep Puri has said that India will carefully assess the G7's proposal to impose a cap on the prices of Russian oil. Speaking to CNBC's Hadley Gamble on the sidelines of the Gastech 2022 summit in Milan, he's also added that India would continue buying oil from Russia and any decision will only be taken on the basis of national interest.
There are many conversations going on due to a large number of factors. There is a shortage of supply. The demand is higher than the supply. OPEC has today taken a decision to circumscribe its own production by 100,000 barrels. There's a talk on the price cap. There are a lot of things. We, apart from being a population of 1.4 billion, we consume 5 million barrels of oil in a day. We have 60 million people going to a petrol bunk every day to fill up. And throughout this difficult period, and by difficult period, I don't mean just the pandemic. Pandemic in and of itself was difficult. Yeah. I mean, the price of oil went down, as far as I can remember, to $19 a barrel. Then it went up to 120 plus. Then you had the, Russian-Ukraine factor. Now, the world is adjusting to all that. Now, what will a proposal mean? We will look at it very carefully. Who will be the participants? what will be the implications, etc. Today, our 5 million barrels of oil, where does it come from? Well, it comes largely from Saudi Arabia, from Abu Dhabi, from Kuwait. Iraq is actually our largest supplier.
Yeah.
And so we have 5 million barrels, each one of them a little less than 1 million barrels, about 864,000. Russia accounted, if memory serves me right, towards the end of the financial year, which ended 31 March 2022, 0.2%. That's all we had. Then when the thing started, so somebody said, India is buying a lot of oil from Russia. I said, the Europeans buy more in one afternoon than I do in a quarter. I'd be surprised if that is not the condition still. But yes, we will buy from Russia. We'll buy from wherever.
Yeah.
A democratically elected government.
And you don't have a moral conflict with the Russians at all?
No, it's just question of no conflict. I have a moral duty to my consumer. Do I, as a democratically elected government, want a situation where the petrol bunk runs dry? Look at what's happening in countries around India.
But they did invade a democratically elected country.
No, I'm not getting into that debate.
Yeah.
It's a question of energy. Energy, as far as I know, is not sanctioned. Okay? Energy, there is a encouragement, but there are so many other factors. Also, if we balance it, we buy 4 million from here, if we buy, I don't know how much we are buying from Russia. So we are realistic. And by the way, those who wanted to do that ideological punitive action, they're still buying.
Yeah.
And they're going to be buying for a while.
All right, Hardeep Singh Puri there, as direct and straight up as can be, saying that we will acquire oil at the best possible price and they will be acting in national interest to see whether they should put a price cap on Russian oil or not. But with that, we're going to get into a break. When we return, we will talk about the market technicals. Mitesh Thakkar will be with us. Hey guys, welcome back. You're still watching Trading Hour. For the market, it is absolutely flat right now. So we have seen a little bit of a pickup from the bottom of the trading session. Like I told you, around 60 points off the day's low. But like you can see from the top, also we've come off significantly. And in 1.5 hours of trading, it's already been quite volatile. So let's get you a technical check on this market. Mitesh Thakkar joins us now for exactly that. Mitesh, it's been, we opened with, good gains. We moved to the high point and now we've seen what's happened. We've come off the lows as well. How would you look at it today and what are the key levels to track from here on the Nifty?
Yeah. So I think I've been maintaining that, the markets mostly will be ranged, and while there will be good demand at the lower levels, which is closer to 17,400, I think we might not have the immediate strength to get past 17,750, 17,850 zone, because most of the directional indicators are contracting and are turning sideways with volatility also subsiding. So I think it's getting into a scenario when the market will possibly do some kind of consolidation, do some range trading. And therefore, you will see profit booking around 17,750 or at best 17,850. I think that's the outlook which people should have. Try to buy on dips and be slightly nimble in taking profits. On the stock side, I think NTPC is breaking out very nicely. So that's a buy with the stop at about 164 for targets of 173. And PNB is the other one. In fact, PSU Banks is a lot looks good. PNB is just breaking out. That's a buy as well with the stop below 36 or 35.90 and a target of around 38.5 is what traders can look at.
Mitesh, just talking a little bit about the longer term, not a day's trade or a 2-day trade. Earlier in the show, we had Rohit Srivastava, who said that the market's peak would be the recent high level of 17,992. And then on the way down, we could even go as low as 16,700. Would you concur with that view?
Not really. I think I'm not that bearish. I think, yes, we have seen a very strong rally from levels of around 15,000 to as high as about 18,000 odd levels. And this movement since the last 2.5 weeks looks like more of a consolidation, not a start of a downtrend. So in a consolidation, there will be pullbacks. You will go down to the moving averages, but I don't think it will be a very deep cut, kind of a cut. So I think two levels which I'm watching on the Nifty very closely is one about 17,100, 150 zone, which is where the weekly averages lie. And then the 200 averages plays around 16,965. Also is a gap at 16,950. So I don't think we are breaking below 16,950. In the best case scenario, I think 17,150, 200 should be sufficient to hold any kind of declines.
Okay, thank you very much for joining in. Let's move on and talk about the tyre space. That's buzzing in trades. Apollo Tyres is higher after Morgan Stanley initiated coverage with an overweight rating. But not just that, JK Tyre, CEAT, the entire pack is active today and it's risen on very large volumes. Sonia is here to tell us more about this Morgan Stanley report. Sonia?
So thanks a lot for that. You know, most of these stocks are sitting at fresh 52-week highs, whether it's Apollo Tyres, CEAT. In fact, JK Tyres that you mentioned is also just about 10% away from its 52-week highs. Now, as we know, the domestic passenger vehicle industry is picking up quite a bit because of the new launches and very strong demand, the order backlog. And this is the basis of the Morgan Stanley report on Apollo Tyres as well. They have initiated coverage with an overweight. They have a target price of 329 on the stock. They say that Apollo Tyres is the second largest player in the domestic passenger vehicle market and is a big beneficiary of the revival that we've seen in demand. In fact, they expect a 31% upside to the current market price for Apollo Tyres, and they say that the India business of Apollo Tyres is all set for a big turnaround. Not just that, the company is also focused on controlling costs and expanding their margins, and that will help them in their operational performance. Remember, for Apollo Tyres, it supplies to a lot of the new launches as well that have taken place in the recent past in the domestic passenger vehicle industry. So that will flow through in their revenues and earnings potential going ahead. Similar is the case for some of these other companies like CEAT as well as JK Tyres, and hence most of these stocks are sitting at fresh 52-week highs today.
Sonia, thanks very much for that. Also, Paytm is trading higher on the back of their August business update. Abhishek has the fine print on that one. Abhishek.
They have come out with a business update of August wherein, you know, the number of loans disbursed is close to 60 lakh, up about 246% YOY and about 105% on a month-on-month basis. So the value of loans disbursed now stands at 4,517 crores, up about 484% YOY and from about 2,100 crores in the previous month. So gross merchandise value is now at 2.1 lakh crore, which is up 72% YOY. So monthly transacting users are at close to 8 crore, which is up 41% YOY and about 1.3% month-on-month. So if you take a look at the calculation, the GMV per MTU, that is at about 26,582 rupees, which is up 22% YOY and about 96% on a month-on-month basis. Back to you.
All right, Abhishek, thanks a lot for getting us the latest on Paytm's business update. But with that, let's move on and talk about another company which is doing very well in trade. The stock of Kalpa Power is up around 8% right now. This is on the back of new orders that came through worth around 1,345 crore rupees. Vahishta is here with the details on this one. Vahishta.
Hi, thanks for that. Yes, that's right. What you're saying, Kalpa Power has secured a new order of 1,345 crores, and some of the details of the order are that this is an order in India and overseas markets in the transmission and distribution business for the pipeline laying works and metro rail electrification in India. Now, some of the positives for this stock and why the street is optimistic about the stock is that it has a robust order backlog. There is a strong outlook for international markets. There is a growth emerging in newer segments like railways. The second metro rail electrification order is strengthening the railways business in new and emerging infrastructure segments. There is also a deleveraging backed by asset monetization for the Indore project, and the street expects strong performance in international subsidiaries.
Thank you very much for that. As we slip into a break, here's a quick reminder for all our viewers. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now on the Money Control app or website.
Welcome back. You're still tuned into Trading Hour, and we have been talking about our markets today. Well, we have a slightly, subdued kind of global cues coming in because there's not too much action to track. But Reema, there are some things that stand out as far as the global markets. What do you have your eye on?
Well, in the global spotlight, I'm watching for all the central bank action. You know, we've been talking so much about the Fed and what it's going to do 2 weeks from now. But world over, central banks are rapidly tightening interest rates as we speak. So earlier today, the Reserve Bank of Australia met, and on expected lines, they hiked interest rates by 50 basis points. This makes it the Reserve Bank of Australia's 5th rate hike, and 4 of them have been by a whopping 50 basis points, which means Australia is caught in the midst of its fastest tightening cycle since 1994. Tomorrow, we've got Bank of Canada. They're going to be meeting where they will deliberate upon a rate hike, and they're also widely expected to deliver another outsized interest rate hike of 75 basis points, and this follows a 100 basis points rate hike that Canada did in July. This would imply close to 300 basis points of tightening since March. But economists in Canada are still divided on whether the rate hikes will continue, or will we see a pause, because Bank of Canada has front-loaded the rate hikes. As I said, it will be close to 300 basis points of a rate hike by Bank of Canada. So they could possibly wait after the current rate hike for the economy to catch up. But the most important one will be on Thursday, when the ECB, the European Central Bank, meets. Europe is currently facing its worst energy crisis. There are numerous anecdotes of firms cutting back on production. Inflation is running at 9.1%, which is 4 times that of the target of 2%. So ECB will need to raise rates. Though there is some debate still whether it's going to be a 50 basis points rate hike or is it going to be a 75 basis points rate hike, and it's going to be a close call. The recent data, ECB's Consumer Expectations Survey, which was published on last Friday, it provided a further argument for a 75 basis points rate hike, with consumers now seeing inflation in 3 years at 3% versus 2.8% in June. So inflationary expectations have also gone up in the last 2 months. And ECB's board member, Isabelle Schnabel, if you remember, at the Jackson Hole warned that ECB should not retreat too soon, even if inflation slows down. But a 75 basis points rate hike by the ECB can further tilt the Eurozone into a recession, but a low rate hike, say a 50 basis points, may not be enough to prevent inflation spiraling out of control. So it's going to be an important week of central bank action. Today, Reserve Bank of Australia has raised rates by 50 basis points, but tomorrow on Wednesday, Bank of Canada is going to be meeting, and on Thursday, we've got the ECB, the European Central Bank, which will be meeting, and all these, the upcoming 2 ones are going to be delivering some big rate hikes. So that's on our Global Spotlight today.
Okay, thanks for that, Rima. We're going to take a very quick break. When we return, it's been a strong debut for Dreamfolk on D Street. We'll get you all the details, and in a bit, we'll also be joined by the management. Stay tuned. Hi, welcome back. You're watching Trading Hour. Let's shift our focus now to the new kid on the block. It was a strong debut for Dreamfolk Services. The company is India's largest airport service aggregator platform, and their shares have listed at 508 rupees a share versus an issue price of 326. My colleague Wahishta joins in to bring us up to speed on all that's happened. Wahishta, morning.
Good morning. Well, Dreamfolk Services has made a blockbuster market debut today. It lists at approximately 62% premium. It is India's largest airport service aggregator platform, like you mentioned, with an expected industry growth rate of approximately 40%. Now, the company provides services to all card networks which are operating in India. There's an estimated market share of the company of approximately 95% in FY22, so has a dominant position in the market. The IPO size was 562 crores and the offer for sale with 33% dilution. Now, the capital that is going to be raised from the IPO is expected to be used for expanding their services globally and for expanding their employee base and rewarding the employees in the form of ESOPs. There were also some robust Q1 FY23 numbers which you recently reported. The revenues have jumped 6 times to 160 crores, while the EBITDA margins have come in at 12% and the PAT is at 13 crores versus a loss of 1 crore in the same quarter of last year.
All right, Vaishta, thanks a lot for taking us through all of the details on this new company. We are also joined by the management now. Libertha Pita, Chairperson and Managing Director of the company, joins us now. Libertha, good morning and thank you very much for joining us. This is Pavitra. And first off, big congratulations on what has been a solid listing for the company, near 60% premium to the issue price. Now, if I can just start by asking you, since this is a new company, take us a little bit through the business model and what do you see as the key entry barrier? Because right now, a big chunk of the market, 95%, is controlled by you.
Thank you, Pavitra. Thank you for your wishes. So just to take you brief about what our business model is. So I'm sure even you would have used our services, Pavitra, whenever you have traveled. So anyone who is traveling from the airport and using their credit and debit card at the lounges. So this program is incubated by Dreamfolk. So we are the one who actually started. So when we started this business, it's not that there were no players. So there were global players already existing in the market. But I think we actually created a differentiator, and the differentiator was the solution. The differentiator was giving a benefit on the same credit and debit card issued by the banks or the card network. So this was one of the biggest differentiator how we created in the market. And I think that is how, today, started in 2013. Today, in 9 years' time, because of the differentiator at 9 years back, and every year and regularly, what we have been doing is upgrading the solution and creating a difference in in providing the benefit as well. I would say that we started in terms of our solution. It's a hybrid solution. So we started with the credit and debit card. Today we have our own app as well, which has been integrated with the bank app. We also have our own plastic, which is also issued by the non-banking clients as well. We have also integrated our systems with the airlines and the OTAs. So in case if anyone wants to even buy a lounge voucher, while booking the ticket, they can also do the same. So these are the differentiator what we have created in the market, and I think that is one of the biggest plus point. And not only that, we started as a lounge aggregator platform, but today we are an airport service aggregator platform. When I say airport services, we have actually added end-to-end services required for a passenger, starting from the baggage transfer, meet and assist, airport transfer. We have even spas at the airport, the F&B, the transit hotel. So everything what a traveler requires, we have actually built into our portfolio. And I think that is what we have been doing, that, ensuring that we upgrade our solution, add more and more services and benefits into the program, which will actually add value both to the clients and to the end users as well.
Libertha, morning. Rima here. Do you need to pay any kind of commission to, say, the credit card companies, which will incentivize them to sell this service, or anything to the lounge? Just understanding the financials of your business model.
Okay, so just let me first take you to the business model. The way it works is, for example, whenever there is, a customer going to the lounge and taps their card, okay? So the transaction is complimentary, or the benefit is complimentary. The customer does not pay anything at the lounge. He has a free lounge usage. But for every transaction which is happening at the lounge, Dreamfolk invoices to the bank or the card network, right? And the card or the network would pay to Dreamfolk for the transactions which are happening at the lounges. Similarly, the lounges would invoice to Dreamfolk for all the transactions which actually take place at the lounges. So we keep a delta and we pay to the lounges. So the way it works is that we have a contract or period which would be from 4 years going up to 5 years contracts with the clients, likewise even with the lounge partners as well. However, the price escalation, so there is a fixed price which is done with card networks or the banks. Similarly, there is a fixed price which is already pre-decided with the lounge operators as well.
If I spend 100 rupees at an airport lounge, right, how much is it that you keep? How much of it is given back to the lounge, the credit card company?
So the way it works is because all the lounges have different pricing, okay? So if you actually see the metro city pricing is higher, the domestic lounges rates would be different to the international lounges. So on average, if I would say that if the pricing is around 100 rupees, what the banks or the card network would pay, we would keep around 15% and the rest we pay to the lounges. So this is how the markup is. So we ensure that we have the margin of 15%.
Anything for the credit card company? Because they have to incentivize users to buy the card,
So
which is...
Yeah.
Go ahead.
Not to the credit card company, because this is a customer acquisition cost for the bank or the card networks. So this comes under the customer acquisition cost for them.
Okay, got that. I'm going to jump a little bit into the financials now, since we are a little tight on time. Your, the money per customer, the revenue per customer is at around 880 rupees. It has seen a significant rise from around 750 rupees, which was in FY20. Can you tell us where this is trending? And also, while this is moving up, your margins per customer are actually coming down. So that has come down from around 138 to it's currently at around 128. So can you tell us what is happening on that front as well?
So the way the volumes are increasing, so the way it works is, that year on year we try and have an escalation both from the client side and from the lounge operators as well. And we have maintained an escalation of 5 to 7% from both the sides, which is for the client or the lounge operators as well. In terms of the margin, I would say that because of the volumes, the way it's increasing, that's how you would see the difference. But we have always maintained that, and we would continue to have the 15% margin for us.
Your current margins are about 12%, right? EBITDA? So you're saying it will go up to 15%?
No, the EBITDA would remain at 12%. I'm talking about the gross margin, which is there.
Okay.
So that is at 15%. Yes.
But as travel picks up more and more, is there not scope for operating leverage to kick in, which can expand your gross and EBITDA margins?
See, we work as a partners to both the clients and the lounge operators. So obviously, we would ensure that, we would not try and add more cost to them, and we will try to maintain this. So this is how we would, continue doing it.
Okay, Libertha, I request you to please stay on. We have to take a mandatory quick break, but we're going to come back and we have lots more questions lined up for you. So get into a short break and we'll continue this conversation in just a bit.
Welcome back. We're in conversation with the management of Dreamfolk. It's had a dream debut today. The stock is still holding up with a gain of close to about 45%. And we have Libertha here with us. Can you talk a bit about your expansion plans? I think you already have tie-ups with close to about 54 lounges, if I'm correct. Do you have more lounges that you're planning to tie up with in India as well as internationally? And talk about your international plans as well.
Sure. So in India, if you actually see, we have 100% coverage of lounges across. So right now, wherever there are lounges in the airport, we already have them as a partner. And in terms of the other services as well, if I have told you that, we have already added the other services like the baggage transfer, meet and assist, airport transfer. We also have spas at the airport, F&B. We also have transit hotels. So these are the additional services what we have added. In terms of the expansion, apart from the airports, we have also, started the railway lounges as well. So there are 9 railway lounges across India, and we have already started few of the bank program and the network programs in these lounges. So there is a railway lounge program as well, which has already started. In terms of the expansion, yes, railways would also be one of the focus for us now, because there are more and more lounges coming up in Indian railways. And not only that, there are airports which are getting privatized. So obviously, there are a lot of expansion plans for the airport lounges as well. So this is for the existing India market, what I'm talking about. In terms of a global, we are already present in 120 plus countries with 1250 plus touch points. When I say 1250 plus touch points, it includes the lounges, it includes the meet and assist and airport transfers, the other services what we are talking about. So the expansion plan is that now we'll, and all these touch points are right now used by the Indian travelers. Right. So now the expansion plan would also be to acquire the other customers, and the way we are planning to do it's going to be in the phase manners. So Southeast Asia and Middle East is the focus market for us in coming years. And yes, now we would be focusing on banks and network and other clients in these regions who would be using services across the globe.
Libertha, how much does this make up of the total business, the international part?
So right now, if you actually see it, because we actually had our global direct contracts during the COVID time. So that's how we utilized the COVID period. So, and if you actually see, the travel has just started. It's just begun end of April. So the transactions are not much. So I would say it's very marginal right now in terms of the global figures. I mean, in terms of the global contribution for the numbers. However, in coming years, we would see that it would actually give a good share of business in the complete portfolio.
Libertha, you give us a ballpark number. 15% is the kind of commission that you enjoy. If I spend 100 rupees right now at the lounge, 85 rupees is given to the lounge and you pocket about 15 rupees. What will the margins be or the commissions be for the railway business, considering the average spend on railways is a lot lower than an airline travel? And secondly, for the international business as you expand, because as you pointed out in the first answer, that there is a lot of competition internationally and there are other players who are doing this. So can you tell us the kind of margins you will enjoy in railways as you expand and overseas?
Sure. So yes, you're right that, the rates or the pricing at the railways are much lower than compared to what the, airports are. But yes, we will ensure that, we will continue to maintain the similar margins, not only for the railways, but even for the other services as well. Now, coming to the international market, right, as I told you that when we started the business in India as well, we already had a global player existing in India, but it was a differentiator what we created. So it's very important. It's not just about, aggregating the lounges and providing it to the client, but it's also about the solution. So I think the solution what we have today, the hybrid solution what we have created, I think that is something where the clients are also looking that, we get this into the international market, into the global market as well. And I would say that the margins would also continue to remain the same. And that's what the strategy is. And we have already started building in the same way. So I think it's not only the commercial, it is also about the solution what we are building in. So, and that's where the clients are, wanting us to get this into different regions outside India.
Okay, just one final question from my end. I was looking at some of the payables which look a little bit high. You do have an outstanding amount of over 40 crores to MSMEs. Could you tell us about that and what is the plan on that front?
So yes, this was because of the COVID period, this were actually got delayed because few of our payments were actually, but in past, if you have actually seen that our payment terms were very clear. But yes, as I told you that, the way we work both with our clients and with our lounge operators is more like a partner, and we actually gave some benefit and we extended the payment terms for the client, and that's the reason, you actually see that in our payments right now. But yes, we have already started doing the changes and the payment terms would be as per the contracted terms, both at the client and the lounge operator side.
It was a pleasure speaking with you, Libertha. Thank you very much for giving us your time this morning to CNBC TV18. Wish you all the very best and look forward to chatting more with you. Well, with that, it's curtains down and trading out from the entire team. Thank you for watching. Stay tuned. Halftime Report is up next.